Everyone has talked about how broken the US income tax system is for decades, and yet none of the people on Capitol Hill ever try and fix it other than making small changes to the percentages each bracket pays. There has to be a simpler way to do it, one that does not benefit the person who can pay an accountant to find every break and loophole over the average independent filer. You could say to change the tax code and get rid of complicated bracket and deduction systems, leaving no room for wealthier people to move their money in smart but shady ways to avoid taxes. But I think as history has shown, people have always been able to outsmart the IRS. This is why I'm presenting an idea to stop all of that, by saying we should largely replace the current federal income tax system with a federal sales tax system. This certainly isn't a new idea. There's an argument for it dating all the way back to 1942 by a professor at the University of Illinois. And while I can't possibly go into every minute detail in this video, I do want to highlight a few broad points that I think would make it beneficial. One is that sales tax would significantly reduce consumerism and promote financial responsibility. Two is with some creative fine-tuning and alternatives, they're naturally progressive, because wealthier people buy more things and more expensive things. And the third is that they're inherently voluntary yet relatively unavoidable, at least what would be taxed in my plan. However, I will mention that I understand sales tax alone might not provide the revenue needed to run the government as it currently spends, without like a 50% tax. But I do have other ideas and changes to account for this later in the video. And I also want to say off the bat that changing the tax system doesn't necessarily mean people will pay less in taxes. After all, I'm not arbitrarily adding to or closing the deficit. I'll just be going off of 2024 government data. What I am trying to do is maintain affordability for lower income Americans without disincentivizing achievement and stifling innovation, while giving people choice, reducing consumerism, and making gaming the system more difficult. So let's get into it. The United States is known globally for our consumer excess, and while in principle I have no problem with people spending their income in whatever way they choose to, many people buy a lot of dumb things they don't really need. And when around half of Americans are indebted to credit card companies, and less than half apparently have enough savings for 3 months' expenses, maybe dialing things back a bit would be good for everyone. This is where a federal sales tax could actually be helpful. Obviously, when you add sales tax to anything, the price goes up, and people don't like to see that. So even though net income versus expenditures will not change after the removal of income tax and the introduction of sales tax, most people will look at their receipt and decide that next time they might want to cut some unnecessary items. The other nice thing about sales tax is that you can remove or change percentages based on what people need. I wouldn't include whole or unprocessed groceries in the tax, the ones mostly around the perimeter of the store, but I would certainly include all of the junk in the aisles. Maybe doing so would help reorient the American diet and help change the fact that 70% of Americans are overweight or obese, and maybe that will have downstream effects in the healthcare system. The opposite also applies to the other end of the spectrum. It's crazy to me that I can go on social media and see a very wealthy person talk about buying a private jet solely in order to exploit a business tax deduction. And while that may not be an individual income tax problem, if you slapped a 10 to 20% federal sales tax on the purchase, you automatically close a common loophole businesses and corporations use on a regular basis. A more apt analogy might be wealthy people who donate to their own charitable foundation for the write-off. Now I should quickly mention a few details before moving on to dispel some questions. One being that direct-to-consumer imports would face a tariff, because tariff is just a tax. Imports through a U.S. retailer would be subject to the normal sales tax anyway. Two is the tax would only be levied on final goods, not intermediate goods, and this includes business purchases so long as they're not for resale. And three, the government is not paying sales tax or tax and transfer payments. I don't get why we complicate government purchases by having it pay taxes that will just go right back into some other spending payment. The next point is that implementing a sales tax is naturally progressive. 10% of 1,000 and 10% of 1,000,000 are very different amounts. Combine this with the fact that sales tax are much harder to avoid on an individual basis, which I'll talk more about later, and you can't say that the rich won't pay their fair share. There's also the option to add a progressive sales tax for certain industries like house buying, automobiles, marine products, aviation products. You can get the picture. Let's just play out a hypothetical and say that we have no tax on vehicles under $10,000, 5% between 10 and 25, 12% between 25 and 35, 15% between $35,000 and $50,000, and 20% over $50,000. First off, I think car prices would probably drop, and people might opt for cheaper cars. A win against consumerism right there. But rich people probably won't care about the tax. If you can buy a $60,000 Mercedes without thinking about it, you probably won't think much more about it being 72. And that is free choice. On the other hand, poorer people who need a car can get one sales tax free under $10,000, or pay 5% under $25,000. Like I said, rich people can't complain that this is unfair because they could have always bought the cheaper option. It's a matter of voluntary overspending. And while these numbers certainly aren't exact, you can see the general idea of how to levy a sales tax in a way to help lower income people without ripping on wealthier people just because they're wealthy. And this idea can be extrapolated to other sectors, as I mentioned previously. This would help balance out the revenue brought in from that industry and could even make up for the revenue lost by removing taxes in other industries like groceries, rental payments, and education. Another aspect of federal revenue that would benefit from this is the obsolescence of under-the-table workers. Workers are generally paid under the table because they either want to avoid income taxes or because they have questionable immigration status, with some estimates projecting up to 70 million Americans doing under-the-table work to some extent. This wouldn't even matter in a sales tax system because income reporting would mainly be for data collection, not tax collection. The only way to avoid sales tax is to buy something off the books from a private seller, and that already happens to avoid state and local taxes, so we can largely assume consumer spending data we see is a valid starting point. Now, there are also some bureaucratic and cultural benefits to the switch. Many people, generally on the right, typically complain about how taxes are to some extent a form of robbery or theft because they are involuntary and mainly punish harder workers. I understand the sentiment. However, sales tax can't be scrutinized in this way because you have to choose to buy something. If you don't want to pay a bunch of taxes, then you can buy nothing but food. Also, the tax is highly visible. Most people don't realize how much per paycheck they're losing because of automatic withholding of payroll and income taxes. All they see is the number that makes it into their bank account. Another incentive to be more fiscally cautious. It would also lower the cost, complexity, and difficulty associated with filing taxes. Most people would no longer have to spend the time or money to file with the IRS. And businesses already submit sales tax to state and local governments. All they would have to do is add another line item to the federal government as well. This could lead to a reduction in government costs too. After all, there's significantly fewer businesses than households, so with a shift to sales tax, a reduction in the size of the IRS could be warranted. There are a couple criticisms of switching to sales tax that need to be addressed. The primary two are that purely replacing income with sales tax would not bring the revenue needed to run the government, and that it would reduce the tax burden on wealthier people. With the ideas I presented in this video, where many necessities of consumer spending are untaxed, I have to largely agree with the former, and say the latter is unlikely but possible depending on the purchasing behavior of wealthier people. Unless you put a flat sales tax on all purchases everywhere, which is not my idea, the tax rate on non-necessities would have to be very high. But I counter this by saying that income tax wouldn't completely go away, and there are other easy changes to rebalance the books. First, I would keep an income tax on people in the top tax bracket, probably around a rate equal to that of either 25% or corporate rate of 21%. Flat rate, no loopholes. That's obviously less than the 37.5% the top tax bracket currently pays, but without write-offs and the addition of sales tax, I highly doubt they will be paying less. This allows for essential goods like groceries, housing, and utilities to remain untaxed, benefiting lower income earners. Another big change I would make is uncapping payroll taxes. Right now, any income over $176,000 is not subject to payroll taxes. So as you can imagine, uncapping that would bring in a lot of revenue, and might even allow us to lower the payroll tax rate overall, depending on how the math works out. This would not include uncapping Social Security payments either, which is unfortunate for high earners, but to be honest, if you're in the top 5% of income earners, I hope you're not planning to rely on $25,000 a year from the government. Finally, I would add to the remittance tax recently passed as part of the Big Beautiful Bill, which levies a 1% excise tax on remittances. I would up that to at least 10% to keep more money flow within the country. And even though it's not an extremely high number, with Congress reporting that $200 billion was sent abroad in 2021, and that's only $20 billion at a 10% rate, like I said, it also keeps more cash flow within the US. Another criticism is a slowing economy with reduced consumer spending due to higher prices. And it's certainly possible for consumer spending to retract a bit in the immediate. But as long as people are consistently reminded that the net amount they're paying in tax hasn't really changed, it's only shifted from being a reduction in your paycheck to an increase in some purchase costs, then the market should balance out. Besides, I said earlier there is a benefit to reducing consumerism rampant in the US, and I would take a small market hit to make the average person less financially desperate, because life isn't all about money. After talking about all those great ideas, let's look at some basic numbers to approximate what these ideas would actually require. First, we need to figure out what revenue is needed to make this possible. The federal government received about $4.9 trillion in 2024. And as you can see, $2.4 trillion were from income taxes, $1.7 from payroll, $530 billion from corporate, and $250 billion from other taxes. Implementing the ideas I presented, income tax revenue would drop to about $900 billion, because that's how much the top 1% is currently contributing, and although I dropped the marginal tax rate by 10 to 15%, by removing deductions and other loopholes, I'm confident their contribution won't really change, because that's in the range of their effective tax rate anyway. Payroll tax revenue would increase by uncapping it, and other taxes would stay at these levels, maybe even having a slight bump with remittances. Adding this up gives us about $3.5 trillion in federal revenue and a difference of $1.4 trillion. This is the required amount of revenue sales tax would have to bring in to be viable. Now let's take only private consumer expenditures from 2024, which doesn't even encompass all purchases, but I'd rather underestimate spending and revenue than overestimate. Private consumer spending in 2024 was just under $20 trillion. So let's start by taking out our exemptions. $1.5 trillion for groceries, $500 for utilities, $700 billion for higher education, and a generous $100 billion for rental payments. That leaves us with about $17 trillion worth of taxable expenditures. But how about we assume a steep 20% retraction in non-essential spending just to be safe? Now we're left with just under $14 trillion in taxable purchases. And you might see some easy math to get the number we need. To get the $1.4 trillion of revenue needed to make up for lost income taxes from $14 trillion in taxable consumer spending, the average sales tax would have to be about 10% to fund the government. And uncapping payroll as it stands percentage-wise would bring in revenue I didn't even calculate into the equation. I'm not claiming this will solve all of our problems, financial or other. There are plenty of changes I would love to see the government make to reduce the tax burden on Americans. But I do think this is a fun and creative way to try and solve some of the common complaints people are constantly throwing against the current system, while trying to maintain affordability for lower income Americans and without disincentivizing achievement and stifling innovation. Thank you for watching. Let me know if there's anything you would change or if you think there's anything that I missed. If you enjoyed, don't forget to like and subscribe, and I'll see you in the next one.